Hello and welcome. My name is Martin Jones and this is P2 Corporate Reporting. ACCA P2 Corporate Reporting coming from the London School of Business and Finance. This is a special half-hour session. It's called mentoring, and the primary purpose of any mentoring session is for me to mentor you, for me to coach you. In particular, the purpose is to address your queries, address your questions. And I have to be honest with you, I come with a little bit of an agenda, and I will tell you about that in just a moment. But because this is a mentoring session and the primary purpose is to answer your questions, unless there's someone out there, then I'm going to be talking to myself, aren't I? So let's find out if there's someone out there. My eyes are now going to move over to the board. There you go. Oh, great. We are joined by Rachel. Forgive the satellite delay there, but I'm just really surprised. I don't remember Rachel. Oh, wow. Not surprised to see Ridwan. Not surprised to see Humayun. Of course not. Of course not surprised to see those two. But Rachel, have I seen you before? Have I seen your name before? I don't think I have. Maybe I have. Maybe I have. But obviously I recognise the other two very, very well. I've actually been corresponding with both on emails. Speaking of emails, shall I remind you of emails? I wasn't going to open up my slideshow, but I've just changed my mind. Why not? So I'm going to open up my slideshow in the background, just behind. You can't see what I'm doing here, but what I'm doing is opening up a slideshow, just so I can reinforce my email address. I'm sure you all know it, but you know, it's good to do so. Here we go. I'm going to go mini me now, and there we go. Suck down into the corner. Oh, you can see my cup there. I don't really want that in the way. It looks slightly weird and ghostly against the green background. There's actually a green background here. I've got a green screen. There we go. Confirmation of what we're doing together, and there's my email. Feel free to use it anytime. Now, I am going to set up the agenda for our half hour together. I do have a plan, actually. In the notes is a chapter on tax, which covers the subject of deferred tax. And the examiner has really pushed down his interest in tax. It's actually a massive subject, and previously used to have quite common 25 markers on deferred tax. But now you can go a whole exam without having any deferred tax at all in the whole exam. And if it is examined, it's normally 1 or 2 marks. If it's examined, it's usually 2 marks actually. And it tends to come up once a year, twice a year, which, bearing in mind there's quarterly examinations, is not really that common, is it? But on the other hand, if it does come up for 2 marks, you want those 2 marks, and often they're quite easy. And it can come up for 5, and if you want to score 5 out of 5, you've got to have some sort of background on deferred tax. So it's worth having this subject of deferred tax. Now, deferred tax is the final chapter in the class notes. I actually have the class notes behind me, to be honest with you, behind this slide. But I don't want the class notes. And the reason is I want to teach you a little bit of deferred tax, but I want to tune my teaching of deferred tax to the current attitude towards deferred tax. To do that, I want to use the pen. So I'd like to talk to you about deferred tax for 15 minutes. And that will then leave 10 minutes for us to do on proper mentoring, which is questions and answers. Now, I've been online 2 or 3 minutes already, and I don't see any questions. So maybe I'm going to spend the whole session talking about deferred tax. But Ridwan, Rachel, Humayun, feel free to bash down your questions. If you've got any questions, bash them down now. If you don't feel like asking them now, you can always ask me on an email, of course. You could always ask me on an email. But if you do feel like sort of having a bit of correspondence between us, a bit of conversation. It's not quite conversation, is it, when you're typing and I'm speaking? But if you feel like having conversation with me, fire away, ask your questions now. I won't look at the chat for the next 15 minutes. All I'll do is just deliver on deferred tax. So there's a chapter on deferred tax, chapter 13. This chapter sits entirely separate to the rest of the syllabus and could be studied on any given day. Could have been on the first day, could have been on the last day, can be now. Because we have 15 minutes together, the time is right, I'm in the mood, you're feeling good, let's do it, let's do deferred tax. So I'm going to teach you deferred tax just by using the pen. So I'm just going to open up a note, or should I say I'm going to move to a note I've already opened. I am now going to write a title. Tell me what title have I put up there directly above my head. Just checking everything's working, of course. Oh, no water left. Okay, good stuff. Thank you, guys. Definitely a delay on the internet today. It's always useful to know. Now, dt is defined mathematically by the IFRS IS 12. dt looks a bit ugly. Let's get really nice. Is equal to no, that makes no sense. Is equal to TD multiplied by a rate, where TD is equal to CV minus TB. And it's really this second equation where we're at. The carrying value is the value carried by the financial accountant, whereas the TB is the carrying value carried by the tax accountant. And I haven't defined any of those terms, so I'll do that now in a list going down. So you've probably guessed what DT is. I'm sure you don't know what TD is. And I'll just work my way down the list so that we've got them all there. So DT is deferred tax, this techie thing called deferred tax, which genuinely makes no sense really, but we do it because we have to, because it says so in the IFRS. And rather cutely, DT is based upon TDs, which are temporary differences. And a temporary difference is a difference between the carrying value carried by the financial accountant and the carrying value carried by the tax accountant. The carrying value carried by the financial accountant is just called the carrying value. And the carrying value carried by the financial accountant is carried on our carrying value statement called the balance sheet. Whereas tax accountants, they carry carrying values referred to as tax bases, and they have a place where they keep their tax bases, where they keep their tax written down values, and it's called the tax pool. It's basically their balance sheet. And if there's a difference between tax accounting and financial accounting, then there will be a difference between tax carrying value and financial carrying value, called TD. And when you have a TD, you multiply it by the tax rate. And that gives deferred tax. And there you go. Actually, I should look at the chat just to make sure there's no questions about what I'm doing on deferred tax. Oh, this one's about deferred tax. So there you go. So there's the formula. Don't know what to tell you apart from let's do an example. So it looks terribly mathematical, it looks terribly nebulous, difficult to get hold of, so we need an example. And actually all we need is 2 examples, if I'm honest with you. But there's no questions up there yet, so I might get away with doing 3 examples. So here's the classic one. We're going to have PPE because it really is the classic one. So the PPE carrying value is 1,000 million, we'll say, and the PPE tax base is 700 million, we'll say, and the tax rate is 30%. In fact, we'll assume 30% throughout. And the requirement for all these little mini examples that I'll do will be DT. And the answer will use what's called a DT table. And a DT table is one where you take the asset, say PPE, pick up its carrying value, pick up its tax base, get the difference known as a TD, multiply that by 30%, and that gives you the DTL, as the examiner calls it, which is deferred tax liability. I can't fully explain it, but I don't feel 100% comfortable with that abbreviation, but the examiner's 100% comfortable with it, so I don't know why it bothers me, but there you go. So DTL, as the examiner would always call that, rather than bothering with the detail. So the PPE carrying value is 1,000, and the PPE tax base is 700. The difference between those is 300, and that gives us a DT of 90. Have I done that right? Yep. And that's it. That's how DT is done. Yeah, Ridwan. I will answer that question because it's relevant to DT. What you've misunderstood is that I've answered the question already. The question is, what is deferred tax? Deferred tax is a number that comes out of those formulas. That is what deferred tax is. Deferred tax, to explain how we ended up in a situation where we have a meaningless balance on the balance sheet, takes quite a lot of explaining, and the examiner has examined this once, 15 years ago. So the examiner does know that DT is completely meaningless and it has no meaning beyond the mathematical formulas over my shoulder. But he hasn't examined it for 15 years, so I don't think it would be useful to really go into, where deferred tax came from in the 1960s and 70s, what happened in the 1990s, and what's happened since the year 2000, and give you a full story on this. I think you'd lose on that. We can if you want to, but I think it probably isn't going to. It came up a lot in F7 MCQs. Well, yeah. So you've seen F7 MCQs, so you know what the game is. The game is you whack numbers into that formula, out pops a balance, and you answer the MCQ at F7. Or in the case of P2, you whack the figure onto the balance sheet and you get your 2 marks. So there are no marks for explaining that deferred tax is meaningless. So just to reinforce that, so deferred tax, what deferred tax is it is a number that comes out of those 2 formulas. What it isn't is meaningful. So the deferred tax liability is 90 because that's the number that comes out of the formula. What we actually owe is nothing because deferred tax is meaningless. Do you understand? So obviously you don't understand in depth, but the deferred tax liability is 90 because the IFRS says we must recognise 90. The amount that the entity actually owes is 0. So we recognise this for historical reasons because it's the law. Good one, Ridwan. Great. So if that makes you feel more comfortable, then that really helps. But the examiner's not going to ask that. He's just going to say, here's some numbers, give me the DT. And you go, here it is. All right. So let's do it again. You obviously are keen on deferred tax. This is really working for me. So we'll do an example 2 and 3. It's actually example 3 that the examiner's really keen on. But an example 2 can get you flowing, get your juices flowing. Example. Oh, so let's do this. Let's do this. So there we go. Okay, the DTL is 90. The deferred tax liability is 90. How much do we owe the tax authorities? Nothing. Okay, so the deferred tax liability is 90. How much tax do we actually owe? Nothing. Similar but different. For example, 2. My apologies. Example 2. This is quite a good one. Now, the first one is highly numerical, and you do get examples that are highly numerical. But generally, they come out in a sentence like this. The entity has a provision of 90 million, we'll say. Actually, let's not say that because that was the figure we had just a moment ago, wasn't it? Of 80 million. The entity has a provision of 80 million, but provisions are forbidden for tax purposes in this jurisdiction. And you can see the presentation of this more common question is narrative rather than a list of numbers. You do get questions that are a list of numbers, but they tend to be more like this, a bit of chat. And the requirement, as usual, is required. DT. And the answer is exactly the same as before. So for the provision this time, we have a carrying value, tax base, deferred tax. No, don't quite understand your question, Ridwan. Do you want to rephrase it? Or maybe this will answer your question. Provision. We're going to identify the carrying value by the financial accountant, but also the carrying value by the tax accountant. And it's a slight perversity of the way questions are written. That often it is the tax base that is easier to extract from the question. Provisions are forbidden for tax purposes in this jurisdiction. So if the tax accountant is forbidden from having a provision, what is the size of the provision that the tax accountant will have? The tax accountant will have 0. Hang on, the tax accountant's got 0. Well, who's got 80 then? That must be the financial accountant has 80. But I've made a mistake there, and it's a very significant mistake. It's a liability. It's very important to use your signs to illustrate assets and liabilities. The other two balances were asset balances. This is now a liability balance. And it's really important for this purpose. 80, sorry, my apologies. Minus 80 minus 0 gives you minus 80. and then you multiply by 30%, I'm just assuming 30%, and that gives you minus 24. Minus 24. And that's a negative dt. And a negative dt is a DTA, a deferred tax asset. So how can you tell when you have a DTL? How can you tell when you have a DTL? Sounds like poetry. When you have a positive DT balance, that's a DTL, as you can see, was illustrated by the previous numbers. But it's actually far more common in the examination. It's far rarer in real life, and therefore far more common in the examination that you have DTA, almost to the point that the examiner never examines anything else. No, 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 don't do that, Humayun. No, 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 no. The thing that you're saying, Humayun, don't do it. When you have when you have positive DT, then it's a DT liability. So what is DT? DT is the product of these two equations. What is DT? DT is the product of these equations. What are the two possible products of these equations? A DTA or a DTL? Which is far more common in the exam? It's a DTA. How do you tell when you've got a DTA? You have a negative DT. What is DT? It's the product of these equations. How can you tell if you've got a DTA or a DTL? A DTA has a sausage around it, and you usually do have a sausage around your DT when you're doing P2. Almost to the point that you can forget about DTL. They do come up, but not that often, to be honest with you. The exam is really lopsided. So this is a DTA, a DT asset. And what it implies, obviously, is that we've got a receivable from the tax authorities. How much do the tax authorities really owe us? The tax authorities really owe us 0. How much did we owe them earlier? We owed them nothing, nada. How much do they owe us? Nothing. It's a fake asset. We recognize it because it's the law. And the examiner does examine these. These are both examples taken from previous exam questions. But the examiner has a particular obsession, and his particular obsession is DT on losses. And the story has layers to it. And I will expound those layers to you. So, example 3. So this is his favourite. It's very short, isn't it? But there's quite a lot going on. So an entity is carrying forward losses of 100 million for tax purposes. I think you can see that it's true again that it's probably easiest for us to address the tax-based first, even though for the purpose of this session we're not actually tax accountants. So, well, maybe you need a little bit of a background here. It's common the world over that when an entity makes losses, for tax purposes, the entity is allowed to carry those losses forward and set them off against future profits. these losses that were made in the first place were bad news. But we're not so much talking about the losses being made anymore. We're talking about the losses being carried forward. The availability of losses to be carried forward is good news, because those losses, when set off against future tax profits, will reduce the amount of tax that will be paid in the future. So the tax accountant is carrying forward an asset of 100 called losses. But now we'll look at the carrying value on the balance sheet. You know a balance sheet: NCA, CA, non-current assets, current assets, PPE, inventory, receivables, bank. When have you ever seen losses on a balance sheet in amongst the assets? When have you ever seen losses, the line losses, in amongst the balances on a balance sheet? Never. Exactly right. It never happens. Financial accountants just lose the losses in the profit or loss reserve. It's properly called the retained earnings. It just disappears into the retained earnings. It's disappeared. So losses disappear on a financial accounting balance sheet. Because they disappear, the carrying value that we carry as an asset is 0. Easy to write, but hard to think about, because it is a bit weird, the question. What is the carrying value that we carry for an asset that we don't carry? The carrying value that we carry for an asset we don't carry is 0, because we don't carry an asset for losses. So we carry 0, they carry 100, but watch the maths here. 0 minus 100 gives minus 100. Assuming 30% again gives you minus 30. So this is a DTA. And it is the DTA that the examiner likes. Good. And often the examiner stops there. But sometimes he does example 3 continue. There's no question, so I'll carry on. It is now considered unlikely the entity will return to tax profits in the foreseeable future. Ooh, yeah, good job. Something like that, he'll say. He doesn't always do this with DTA, but he does quite frequently. What he does is he sets you up with a story where you already are carrying forward a deferred tax asset, and carrying it forward last year seemed fine, and carrying it forward the year before seemed fine. So mathematically it's correct to have a DTA of 30. And that would be the first thing that you prove. The first thing would you prove that is mathematically correct. To have a DTA coming from losses, that's correct conceptually. But like any asset, an asset must be a controlled right to a resource. It has to be a controlled right to a future economic inflow. And we do have control over this asset. But the problem is that there is no inflow. Now, jumping at it straight like that is a bit aggressive and maybe a bit unfair on you, so I'll build towards it. Just imagine that you've got some stock. It's your stock, it's in the corner. You can definitely sell it. Trouble is, no one wants to buy it. You have the right to sell it, but no one wants to buy it. It's a right to an inflow, but there won't be an inflow because no one wants to buy it. What you do with that stock? You write it off. You've got a receivable. there's the invoice. The company, the customer, definitely owes you. Trouble is they've gone bust. You do have the right to the inflow, but there won't be an inflow because the customer's gone bust. What do you do with that receivable? You write it off. What do you do with that inventory? You write it off. This is academically an asset of 30, but because it is unlikely that the related entity will return to tax profits, when will you get to use these losses of 100? When will you get to use the losses of 100? Not for the foreseeable future, not forever, as far as the examiner is concerned. So therefore, if you do have the right to the inflow, but there is no inflow, then you de-recognise the deferred tax asset. You impair it, you throw it off the balance sheet, you write it off. So, answer. The DTA is written off as, the fancy name is irrecoverable. And I've just forgotten how many R's there are in irrecoverable. I think I'll use Google on my phone rather than zip off to another page. Oh, I had Google there actually. I've got a feeling it's 2. I hope Google's heard of the word irrecoverable. 2 R's. Looked wrong when I wrote it. Oh, done it again. Oh, and by the way, Cristiano Ronaldo's apparently had twins. Yeah, 2. Yeah, right. I mean, great. There you go. So irrecoverable. So what do we do with the stock that we're going to have to throw away? We write it off as irrecoverable. What do we do with the receivable that we can't collect because the customer's gone bust? We write it off as irrecoverable. What do we do with the DTA that's useless because we're never going to return to profitability? We write it off because the asset is irrecoverable. And when he does that, it tends to be more marks. It tends to be 4 marks. The way the game is played is there is a couple of marks, first of all, for showing that you do have a DTA, which is the first half of this answer, and then a couple more marks for explaining the writing off of the asset as irrecoverable. So it's quite common the examiner just has example 3. But sometimes he has example 3 and example 3 continued, in which case it obviously needs more marks. It needs 4 marks. Great. It looks like everyone is cool. I have to admit, I did not look at the clock when I started. That's a bit irritating, isn't it? So I do not have the exact time of when we started. I think that is half an hour, but actually it could be a couple of minutes shy of half an hour. So over to you. Are there any more questions? There was some good chat going on there. Rachel, you've been very quiet in the background. Can I help you at all with any of your stuff? Any questions? Any questions? Any questions? While you are thinking about that, I will go big head. Ta-cha. And talk to you about a couple of things. The first thing is deferred tax. That's it. That's all you need for deferred tax. There's quite a big chapter on deferred tax at the back of the class notes, and you can work those exercises, lots of good exercises for practice. But because the examiner has pushed down the importance of deferred tax in the P2 examination, I suggest to you what we did together is sufficient. And then nope, still no question. Oh yeah, everyone's got a question. In foreign groups, question extreme in the calculation group was that the OC items were not added. Yes, that's enough. So I won't read out Ridwan's question in full, but I'll answer that question to you personally, Ridwan, because it's a bit of a specialist thing. It's very odd, but the examiner originally used to use retained earnings for that thing that you're talking about. He does now actually use OCE, but you can use either because he used to use retained earnings. So when that question was examined, he used to use retained earnings. So that's why I used retained earnings, because that's what he did at that time. Oh, we've got loads of questions for you. Humayun, for example, a question value in chapter current issue, a narrative question asks for 11 marks. We write 11 points. Exactly right. Exactly right, Humayun. You'll get very used to this because you're thinking just of question 4 at the moment, where the examiner says, talk to me about financial reporting. Off you go. 11 marks. But that doesn't just happen in question 4. It also happens in question 3 and in question 2, and actually in question 1, B and C. So the examiner will set up a little ethical dilemma where the finance director is being a scumbag, and your job is to call the scumbag a scumbag. But you're not just going to score 1 mark for calling him a scumbag. You've got to score 7 marks. So you make 7 marks about whatever he's doing, and then your conclusion is he's a scumbag. So that's that. So yeah, absolutely. So the whole of the B section has exactly the same marking guide. You make, for an 11 marker in question 2, you make 11 points. It's the same concept throughout the whole B section. Rachel, you've just enrolled. Lovely to see you. You've got a bit of catching up to do. The first 4 evening sessions have in fact been recorded already. Have fun catching up with those. Yes! Humayun's pointed out that in P1 and P3 the marking guide is not like that. It seems most unfair to me. I don't know why it is. I don't really understand it. Absolutely. I better read out the point of Humayun because it's such a good point. If you've not done P1 and P3, then you don't know this, but you will find it out when you get there. In P1 and P3, the marking guide often gives 2 marks for certain points and 3 marks for others, and then you need to make a conclusion. Humayun, no need to get confused because it's actually more, it's better in P1 and P3 because you write less. It is weird. The volume of stuff that you need to write in P1 and P3 is less than P2. P2 is where you need your volume. But there's no need to be confused because P2 is the simple one. If you've got 11 marks, you make 11 points. There are upsides as well, by the way. In P1 and P3, you have to make cohesive arguments. In P1, you have to sort of see both sides of the argument and come to a conclusion. In P3, you have to build towards a strategy. But the great thing is, in P2, is you just chuck down points in any old order and you score marks. So that's an upside for P2. P2, if it's 11 marks, it's 11 points, but those 11 points can be in any order. They're just 11 individual points, so that's an upside. But the downside is the volume of answer required at P2 is bigger than P1 and P3 if you're comparing. So P2, very simple formula, 11 marks, you make 11 points. In what order? Doesn't matter, any old order. More of this and less of that? Yeah, if you want. The broader, the better. So, if there are 5 issues in there, it's 11 markers, say. So, there's 5 issues in there. There's revenue, there's government grants, there's foreign currency, there's, what else is there? There's provisions and there's deferred tax. Then you can just talk about 3 of those if you want to and really go into detail on those 3. But the easiest thing to do is to make 2 points, 2 points, 2 points, 2 points, 2 points, then a conclusion, and that'll score you 11. So, no, that thing that you say, Humayun, it's never, ever that. It's always 11 marks, 11 points. Never different. Always 11 marks, 11 points, 7 marks, 7 points. 14 marks, 14 points. If the examiner wants 7 points, he'll give you 7 marks. Always. Thank you very much for your time, guys. The studio's required now, so I do need to get out of here. I think that is half an hour. Thank you very much for your company. Make sure you get into your deferred tax and just continue with your homework. You know all your homeworks to be getting on with. It's question Ronet in chapter 2 is the main one. Ronet, but also Hebrides from chapter 1, Extreme from chapter 3, Squire from chapter 4, and Value, which is the one Humayun was talking about, Value is the question from chapter 5. Look forward to seeing you soon. Have a fabulous week, and I will see you soon.